Listen up. This just dropped minutes ago on January 31st, 2026, and it's massive. President Donald Trump has officially nominated Kevin Warsh, a former Federal Reserve governor and longtime critic of the current central bank setup, to become the next chair of the Federal Reserve, replacing Jerome Powell when his term as chair expires in May. Trump posted it himself on Truth Social this morning. I am pleased to announce that I am nominating Kevin Warsh to be the chairman of the Board of Governors of the Federal Reserve System. He added that he's known Warsh for a long time and has no doubt that he will go down as one of the great Fed chairmen, maybe the best. Dramatic pause. Think about what this means. The world's most powerful central bank, the one that sets interest rates affecting your mortgage, car loan, credit card debt, savings yields, stock market swings, and the entire global economy, could soon be led by someone Trump handpicked after months of relentless attacks on Powell for not cutting rates fast enough or deep enough. If confirmed by the Senate, Warsh would give Trump unprecedented influence over monetary policy in his second term, potentially ushering in the aggressive rate cuts he's been demanding since day one. Markets are already reacting. The political world is buzzing, and everyday Americans could feel this in their wallets sooner than later. Stick with me for the full deep dive. Who Kevin Warsh really is, why Trump chose him now, what his views on rates and the Fed could mean for inflation, borrowing costs, stocks, jobs, and the economy, the confirmation battle ahead, reactions from Wall Street to Washington, and why this nomination could be one of the most consequential economic moves of Trump's presidency. This is not hype. This is breaking reality. Let's unpack it step by step. First, the announcement itself came straight from Trump on Truth Social early this morning. No press conference, no leaks to soften it, just a direct post that ended a 5-month speculation saga. Powell's chair term ends in May 2026, though he could stay on as a governor until his full board term expires in 2028. Trump has been feuding with Powell publicly and privately for years, calling him wrong on rates, accusing him of political bias, even floating investigations into Fed spending. This nomination is the culmination of that pressure campaign. Trump met with Warsh in the Oval Office just yesterday, Thursday, and offered him the job. According to senior administration officials speaking to outlets like NBC News, the pick ends uncertainty that had markets on edge. Other names floated included Kevin Hassett, Christopher Waller, Rick Rear from BlackRock CK, but Wars was always the fronter-runner among those who align closely with Trump's desire for a more compliant Fed that prioritizes lower rates to boost growth. Who is Kevin? Warsh exactly? He's 55, a lawyer by training with deep Wall Street roots. He served as a Federal Reserve governor from 2006 to 2011, appointed by George W. Bush at age 35, the youngest ever at the time. During the 2008 financial crisis, he was right in the thick of it, helping craft emergency lending programs and liquidity measures that stabilized banks. After leaving the Fed, he joined Stanford's Hoover Institution as a distinguished visiting fellow, became a Morgan Stanley advisor, and built a reputation as a thoughtful conservative voice on monetary policy. He's not a firebrand like some Trump allies. He's measured, articulate, and respected in Republican economic circles. But he's been a vocal critic of recent Fed leadership, arguing the central bank lost credibility by keeping rates too high for too long, over relying on forward guidance and ballooning its balance sheet during COVID without enough accountability. In interviews and op-eds, Warsh has called for a regime change at the Fed to restore focus on price stability and growth without endless stimulus. He echoes Trump's view that interest rates should be lower to support American businesses and consumers, but he's more cautious than the most aggressive doves. He's warned against reckless easing that could reignite inflation. Why does this pick make so much sense for Trump right now? The economy is mixed. Inflation cooled to around 2.7% CPI. Unemployment steady at 4.1%. But growth feels sluggish to many, and Trump has repeatedly said the Fed is holding back a boom by not slashing rates aggressively. Powell's Fed paused cuts late last year after a series of reductions, citing sticky inflation risks, exactly what Trump hates. By nominating Warsh, Trump is betting on a chair who will be more responsive to White House priorities. Faster, deeper cuts to fuel the golden age of growth he promised. Warsh has criticized the Fed's independence in subtle ways, not calling for abolition, but arguing it needs to listen more to real-world signals like borrowing costs hurting small businesses. If confirmed, he could steer the FOMC toward a more dovish stance, potentially bringing the Fed funds rate down from its current range around 4.25 or 4.5% as of late January toward 3% or lower by year-end, depending on data. Now let's talk market reaction, because this news hit trading floors hard today. Stocks opened mixed but rallied on the news. Dow up about 0.1% early. Nasdaq and S&P futures gaining as investors bet on easier money ahead. Bond yields dipped slightly, signaling expectations for lower rates sooner. Why? Markets hate uncertainty, and Powell was seen as data-dependent and independent. Warsh is viewed as more predictable in aligning with pro-growth policies. But there's caution too. Some analysts worry about perceived politicization of the Fed, which could spook long-term investors if it looks like the central bank is becoming a White House tool. Goldman Sachs and others noted that while Warsh is qualified and Senate confirmed before, the confirmation process could be rocky given Democratic opposition to anything seen as eroding Fed independence. Still, with a Republican Senate majority, odds favor confirmation, perhaps by late spring or summer. Digging into Warsh's views on key issues on interest rates, he's consistently argued for lower rates than the current path, saying high rates punish Main Street while benefiting Wall Street speculators. In a 2025 CNBC interview, he said the Fed should have cut more aggressively post-COVID to avoid the inflation spike, then pivoted faster once inflation peaked. He supports a rules-based approach, but flexible enough for crisis. On inflation, he's hawkish in principle, believes price stability is job one, but thinks the Fed overreacted upward and should err dovish. Now, on the balance sheet, critical of quantitative easing expansions, calling for faster runoff to normalize on regulation, pro-business wants lighter touch on banks without repeating 2008 risks overall. He's a mainstream Republican economist, smart, experienced, not extreme, but his alignment with Trump's lower rates now mantra makes him a dream pick for the administration. The confirmation battle ahead. Fed will be intense. Senate Banking Committee hearings will scrutinize his record 2008 crisis role. Post-Fed writings, potential conflicts from Wall Street ties. Democrats will hammer any sign of politicization, asking if he'll resist White House pressure on rates. Republicans will praise his credentials and crisis experience. Trump has a solid Senate majority, but a few moderates could demand assurances on independence. If confirmed, Warsh would be the first Fed chair since Paul Volcker to have such explicit presidential endorsement for a dovish shift. Powell has defended the Fed's autonomy fiercely. Expect him to stay on as governor and potentially clash if Warsh pushes too hard. What does this mean for you? If Warsh gets in and delivers lower rates, cheaper mortgages, 30-year fixed could drop toward 5 to 5.5% from current 6+, lower credit card and auto loan rates, boosted stock market, especially growth stocks, stronger housing and consumer spending, but risks. If cuts come too fast, inflation could rebound, forcing painful hikes later. Higher deficits from tax cuts and spending could clash with easy money. Global effects, weaker dollar, emerging market volatility. For savers, lower yields on CDs and savings accounts. The Fed's dual mandate, maximum employment, and stable prices could tilt more toward growth under Warsh. Reactions are pouring in. Wall Street mixed welcome, qualified pick, but concerns over independence. Economists, some praise experience, others warn of politicization risks. GOP lawmakers supportive, seeing it as win for pro-growth agenda. Democrats skeptical, calling it a power grab. Powell himself hasn't commented yet, but sources say he's focused on finishing strong. Trump allies like Stephen Miller and economic advisors are celebrating. Finally, a Fed chair who gets it. This nomination is more than personnel. It's a statement. Trump wants direct influence over the economy's steering wheel. If successful, it could define his second term's economic legacy. If blocked or backfiring, it could fuel narratives of overreach, markets, voters, borrowers, investors. Everyone's watching. What do you think? Will deliver the cuts Trump wants, or will Senate push back and data force caution? Drop your thoughts in the comments. Great pick or Fed independence at risk? If this breakdown helped, smash that like button. Subscribe for more breaking economic news, hit the bell, and share. With anyone tracking rates or markets, full sources in the pinned comment: CNN, Reuters, NPR, Politico, CNBC, and more. Thanks for watching. Stay tuned as this confirmation plays.